Well, joining us live this morning to shed more on this topic is economist Michael Szanto. Michael, good morning to you. Thank you so much for being here.
You're very welcome.
As we talk about the Dow potentially reaching this 40K milestone, what does this mean? How does it impact consumers?
Well, the stock market is doing great. We see that clearly, which is great for economy. It's great for the wealth effect. Americans are feeling wealthier because their 401ks, their stock brokerage accounts are doing well. The U.S. economy is doing much better than feared, given the fact that the Federal Reserve had to do a lot of rate hikes to try to fight, as largely successful, in fact, unprecedented inflation. So it's all good news. 40,000 is a big number, so the stock market's doing very well. So it's all very good news to a certain extent.
For those that might not follow the Dow and the S&P and the NASDAQ, they might be like, why does this even matter? Why should I care? How will this impact my pockets? Could you break that down for us, please?
Well, a lot of it is that more Americans are investors than ever before, really. And that's exciting to see because companies like Apple in the 80s, Amazon in the 2000s, a company like Oracle that's becoming important again, they are heavily financed through the stock market directly and indirectly. So that the stock market is a very major engine for capitalist US that makes us the most innovative, richest, most economically successful, strongest country in the world. The stock market is, to a large extent, the engine of our economy, and it drives our economy. What we're seeing in parallel right now is still very, very low unemployment, which is wonderful. It's not what you usually associate with aggressive interest rate hikes by the Fed to combat inflation, because historically the Federal Reserve, when it's doing a rate tightening cycle, is trying to slow down an overheating U.S. economy, and even is willing to suck up an unfortunate side effect of rising unemployment. We haven't seen that. We have very low unemployment. So there are a lot of jobs, at least statistics indicate, available for people who want it. In the African-American community, you're seeing record-breaking low unemployment. So we're reaching across many, many sectors in our economy. It doesn't solve all of our country's problems, clearly. We can talk about that another day. We're not a perfect country, but the low unemployment rates, the rising stock market, which reflects strong, profitable companies, especially the largest companies in the U.S. Wages are finally catching up with inflation. Inflation is slowing. So we're seeing a lot of great things. Now, caution, at the very least, normally it is very common to see a pullback when the stock market's soaring, that even if it continues to soar, it needs to take a breather, and that could be the stock market dropping as much as 10%, which could be painful if you get carried away. There are people questioning the valuations. They're saying that the market's getting carried away, and we see this often. People worry about a lot more bubbles than there are, but there could be a little bit of an element of bubbles. AI is a huge driver behind it. How does it affect the average American? Well, it does appear like AI is taking off, and it will be transformative. It'll make your work easier. It will help do away with the more mundane, the more tedious, the more aggravating type of work, which we've been seeing computers do for us over the last 40 years. We don't have to worry about whiteouts. We don't have to worry about broken typewriters, but now your AI assistant makes it even easier, anticipates your next move, helps correct your grammar, gives you suggested writing, and who knows what else. Driverless cars will come eventually. It's just a question of how many years. It's a very exciting time. And the market is a good barometer of the fact that the U.S. economy is, in fact, the strongest in the world. And we do have, right now, a very good job creation engine as well.
Hey, Michael, I appreciate you breaking all of that down in your perspective. You did mention the Federal Reserve, and I want to ask you, as we discuss the Fed and interest rates, is there any relation to that and the Dow? And could you break that down with, if there's not a correlation, what we can see in the coming months as it relates to those interest rates?
Excellent question. And this Friday is coming out a important inflation number, which the Fed could react to. So the market is anxious about it. We, in fact, see European markets, I believe, last I checked, actually down. Futures, which are basically bets on the US market opening up today, are also slightly down. So there's going to be a little bit nervousness about that. The Fed does not look like it's going to lower rates as much as hoped just a couple months ago because there's been a slight setback on the course of returning to the inflation that the Federal Reserve says that it wants. So that is a big issue. And there's also a question of why the market as a whole keeps going up, seemingly, when the rates picture isn't getting better. Yes, inflation is coming under control better than feared like over a year ago, but there's a couple hiccups. So the question is, why does the market keep going up and up? 40,000 is a huge number, by the way, for the Dow Jones. But a quick caveat, for many decades, and especially in recent years, the Dow Jones is a much less important index than the S&P 500, which is the most important index, which already, I believe, hit a record, just not a number as flashy as 40,000. It hit a record. And the most important NASDAQ number index is probably QQQ. And that's a very popular trading vehicle, QQQ as well. And it's not a terrible investment vehicle, actually, because people who bought it about 20 years ago would have made a fortune in QQQ. I don't think it's going to exactly repeat, but the Dow Jones has become a less important index. It's kind of the oldest, the most traditional. TV newscasts in the 80s and 90s would always lead with the Dow. So it's the one that people think about the most. Arguably, it's the least important, the least accurate. Sorry to be a party pooper in the 40,000 party. But it corresponds with what the S&P 500 and what the market's doing. I would also like to give a important caveat that for the most part it's broadening now, but that the rise in stock prices have been largely focused on a small number of stocks. They have been called the Magnificent Seven. That's Apple and even Tesla, those two not doing so well in the last few weeks. Microsoft, Google, now known as Alphabet, Meta, formerly known as Facebook. Those stocks called the Magnificent Seven, and a few others, mostly tied to AI, but also new weight loss drugs, have been doing the vast majority of the heavy lifting. But it's been inspiring to see that rise in stocks broaden out to more stocks. Now, that makes it a little bit precarious, the rise, that it's dependent on what were called in the last year or two the Magnificent Seven. But on the other hand, when you look at those particular companies, they are immensely profitable. They have incredible access to cash. Most of them have a lot of cash on hand, which is very different than the bubble that we saw, thank God, in 1999. That these are very profitable, very wealthy companies. And even when you look at the broadening beyond the Magnificent Seven, the companies whose stock are going up are, by the most part, very financially strong. So that's the good news. Is the stock market getting back to what I said before? Is it getting ahead of itself? There's absolutely nobody who has a great track record, 100% of predicting that. In fact, the vast majority of experts thought that the market in the last year would be pretty bad. So the market has actually surprised. The excitement of AI has led to an explosion. It could be getting a little bubbly, but I think we're living in a very happy, exciting time for the stock market, and that's very good for a country. It's very good for investors. It's very good for savers, and it's very good for workers in this country. In short, it's very good for everyone in this country.
Michael, I absolutely love just your expertise and how you put things into perspective, because so many people think they don't even need to care about the Dow if they don't have stocks. But it's so important to keep a close eye. I mean, if things go down, it could impact the price of goods and services. Just so many things intertwining and correlating. And we always appreciate your expert advice here on Live Now. Before I let you go, is there anything else you'd like to add?
Well, I mean, it's really good. Be cautious. Always take a long-term thing. There could be a pullback. There's some people who think the valuation is perhaps getting ahead of itself. We've seen that before. Perhaps people are just stocking up on AI chips, and then we'll have major companies like Microsoft and Google and Facebook will have a hangover and decide they got too many. There's a bunch of hiccups that we could face. So don't get too much FOMO here because it'll be long term. I can even give one stock tip that is almost no lose over the long term. Normally a risky thing 10 years out, although it has a high valuation, so it could dip. But in the long term, I have to say, and almost always have to say, the one kind of sure thing in the stock market, Dutch company ASML. They make the lasers, that lithography machines that make all modern chips, and they don't have a competitor. Valuation, there will be different opinions about whether it's priced too much or not enough, whether there could be a dip. But it seems, and God forbid anything happens to Taiwan and we have to build chip factories in the US and in Europe more than we have, we'd have to go to ASML. So they're kind of win-win. If Taiwan does well, God willing, TSM, their largest chip company, is making more and more chips. They'll have to expand. They go to ASML. And of all the parts of chip manufacturing, I don't think there's any argument that they are the key company. They make the lasers that etch the microscopic in increasingly smaller transistors and chips. I have no connection to ASML, other than I admit that I'm an investor. I should say I'm long in that among many, many stocks. But I do think, and I love it, I just couldn't resist throwing that out, given that we are in an age of incredible excitement about technology, chips, AI, driverless cars. ASML makes Intel, Samsung, and TSM happen. Because without their lasers, we would have no modern chips, God forbid, because everything depends on ASML. And they're actually a player you don't hear so much about. Their stock is doing very, very well, but you can't come up with a story where we don't need ASML. You can come up with a story where TSM gets basically Samsung and Intel catch up with TSM. You could come up with a story, God forbid, the Chinese government does something crazy. You could say Intel's behind, they get further behind. AMD gets replaced. Even NVIDIA, with its enormous profits, its AI ecosystem that is properly called unrivaled, gets replaced by some unforeseen disruptive technology, or AI takes longer than we think to fully monetize at companies like Facebook and Microsoft. You cannot come up with a story that replaces ASML, at least one that I have ever heard.
Well, Michael, we definitely appreciate you. I don't think any of the viewers are complaining as you're giving them stock advice, probably taking notes so that they can get some extra money on this Monday morning. Michael Szanto, economist, thank you so much for joining us and giving that expert advice. We always appreciate you joining us here bright and early on Live Now from Fox. You enjoy the rest of your Monday.
You too. You too.